I want to change gears here really quickly. We're going to go from debunking myths. We've already discussed debunking some credit myths. We just spoke about debunking some myths when it comes to buying a home. Let's debunk some myths that pertain to refinancing. Is there a benefit to refinancing if I already have a very low interest rate?
This is a paradigm shift that a lot of people have to understand because they feel like, oh, well, I already have a 3% or a 2% mortgage. Like, I have the best rate I can get. I shouldn't refinance. Absolutely incorrect. As we've discussed and will continue to, it's there's a lot of other benefits to refinance besides just lowering your rate. We're talking about shortening the loan term, taking you from a 30-year mortgage to a 20-year or 15-year mortgage. Who cares what the rate is? It's about the time that it's going to take you. People get so wrapped up in the rate. You'd be better off paying a 10% rate for 5 years than you would paying a 5% rate for 10 years. And think about that for a second. It's not about the rate. It's about the total interest over time. That's where the mortgage companies make their money. So that's one reason why you might want to refinance. Even if your rate is going to go up, if you're shortening the length of time, you may actually lower the amount of interest that you're going to pay. So that's one. And then debt consolidation, as we've talked about, is huge. Okay, we can save people $500, $1,000, $2,000 a month by consolidating their debt into their mortgage. I don't care what their rate is right now. A lot of the time, the rate could actually go up and it still makes sense because we're actually improving the cash flow. We're taking high interest credit card debt, medical bills, et cetera, rolling it into the mortgage.
So it's not necessarily always about the lowest percentage rate. It's you want to minimize the length of your mortgage. I always thought one time, was it you or somebody I was talking with? They're like, you never want to pay off your house. Don't pay off your mortgages.
Everybody's financial circumstance is different, and there are some people that get a good tax deduction or have certain tax deductibility with mortgage interest and different things that go along with that. So some financial advisors do recommend that you keep a mortgage because your money can work harder for you in other places, without a doubt. But it's not about the interest rate, like you said. It's about what is the total amount that you're going to pay over the life of the loan, closing costs, interest, fees, etc. And we really need to look and say, where are you at right now? What's your cost and what's your total cost going to be on the new loan? And you'd be surprised to see, even if the rate is going up or staying around the same, you can really reduce that interest.
Now, can I refinance again if I just refinanced, let's say, just a year ago, 12 months ago, or like how often?
Absolutely. People have this thing in their mind that, oh, I can only refinance once every year or 5 years or whatever it was passed down to them by their friend or relative that thought that they knew. I've had multiple clients refinance 2 to 3 times within like an 18-month period.
Whoa.
If there's a benefit, that's what we need to look at. What's the benefit? Maybe we refinance you and consolidate your debt and save you $500 a month. And then 8 months later, we refinance you again, lower your rate on your mortgage, and we save you another $200 a month. If you have that closed mind, you're going to miss out on opportunities, especially right now.
Well, then how do I know if I even have enough equity in my home in order to refinance?
The answer to that, it's a difficult answer because you as a consumer, as a homeowner, don't know what your house is worth. You're not a real estate professional. So I think the best route to go, a lot of consumers just go online. They go to Zillow, they go to Realtor.com, and they say, oh, well, it says my house is worth this. But you really want to talk to a mortgage advisor because they'll be looking at appraisals all the time. And they'll be able to tell you what your house is, at least a general idea of what it's worth, to see whether you're going to be able to actually qualify for that refinance. But usually when you buy a home, you're going to want to wait at least 12 months after you buy it to move forward with that refinance, especially if you put a low down payment. If you put a higher down payment, 20, 30%, you might have a benefit to refinance in as little as even 3 to 6 months after you buy the house. But in most cases, after you purchase, you're going to want to wait 12 months to really build that equity.
All right, let's say I do refinance. Do I need to pay all those, like the closing costs all over again when I refinance?
You do. The closing costs can be different when you refinance versus when you purchase a home. There's going to be different types of closing costs that are going to have to be paid. There's certain things that are required when you're buying a home, like owner's title insurance, for example, that is not required when you refinance. So the answer is yes, you have to pay them, but here is the secret sauce that so many people don't realize or understand, and they miss out on the benefit of refinancing. And what that is is that closing costs on a refinance can typically, almost without exception, be rolled into the mortgage. And what that means to you is that it's amortized over the life of the loan. So you're paying those closing costs over a 20-year, 30-year period, and it's not a negative, it's a positive, because now it only costs you $8 a month.
It's interesting that you say that, because when I was just talking about, or you were just mentioning a little while ago answering another question about, adding your debt into your mortgage when you refinance. Somebody had once, and I heard that before, and somebody said, well, why would you want to, something that you just charged on your credit card, let's say you bought a $1,000 laptop, pay the darn thing off. Why would you want to take 20 years to pay that off? Why would you want to consolidate that debt into your mortgage? Then you'll take forever to pay it off. Have you heard that before too? Or
I've heard it all the time. And like we spoke about on the debt consolidation show a couple weeks ago, that's the big mistake that people make, is that they look at it like that. Well, I'm putting it into my mortgage and I'm going to pay it over 20 years. Stop that thinking, step back, look at it as a financial plan, and let's see how much you were paying before the cash out refinance, the debt consolidation, how much you're paying after. Let's take the money that you were paying to the credit card debt and let's put that on your mortgage. So it's not going to be 20 years. It's going to be 8 years. It's going to be 10 years. It's going to be 1/2 to 1/3 the time by reapplying that. If all you do is take that advice that you're going to stretch it out over 20, 30 years, then you're falling into the trap of the banks. You're doing exactly what they want you to do, and you're never going to get ahead financially.
See, that's what I wanted to hear, and that's why this show is so important, my friends. I kind of teased a little bit at the top of the show on how you can obtain a book absolutely free. And here's the kicker. It's written by the star of the show. Rob Weinberg himself is the author of this book. And I got to tell you, I flipped through this. It's not terribly long. You can probably get through it in a on a snowy day. You could kick in, put the fire on, put a nice cup of coffee on.
It's a quick read.
It is. You can read it in a day, and if you have other things you can do, you can certainly read it in an entire weekend. It's entitled "Mortgage Strategies for the New Millennium: Using Your Home Loan as a Financial Tool." Really quickly, because I'm running out of time. How long did it take you to write this book? Because there's a lot of info in here.
It was a work in progress for about 18 months. That it took me. I mean, I spent about maybe 6-7 months really getting all the content based on what my clients were telling me that they wanted. And then I spent about a year refining the content, making it very quick and readable. There's a lot of graphs and charts that are very easy and visually pleasing to see. So there, depending on whether you're looking for a reverse mortgage or a refinance or buying your first home or credit tips, we have chapters on all those. So you can literally pick and choose. You may find value in just 1 or 2 chapters, or you may read the whole thing cover to cover. Okay, so it's new, copyright 2019. So it's about as new. Nothing has changed. Everything in here can be is certainly applicable to today's industry. I want you to make sure that you know how to obtain this book right now. Absolutely free. Don't even wait for the end of the show. I want you to email Mortgage Matters Radio Show at gmail.com. Again, I'm going to repeat that for you because that email address serves as a dual purpose. Number one, for the sake of obtaining this free book right now, the first 3 people who email this radio show at the aforementioned email address, I'm going to repeat it for you, will obtain a free book. Shipping, handling, out the door, all covered for you, as well as the cost of the book. You ready? Don't wait for the end of the show. Do it right now. Write this down. Mortgage Matters Radio Show at gmail.com. The other function that email has is if you've got a question maybe you'd like to have answered right here on these very airwaves, who knows, could be as soon as next week. I'd also encourage you to use that email address and get a hold of us. I'll be happy to read off a question. Perhaps you can answer it live right here on the airwaves. And of course, if you've got questions, I want to make sure that you are able to contact Rob himself. 860-413-3938. Very easy phone number. I'll repeat it for you anyways, because it's so important that if you've got a personal nature of your question, you address it directly to Rob Weinberg himself. 860-413-3938. For Rob Weinberg, I'm Gary Byron. Thank you so much for listening to Mortgage Matters. We will be back with you next Saturday. Until then, have a good one, everybody. So long.